Ever wondered how the stock market works or why it even exists? Well, it all begins with a concept as old as trade itself, a marketplace. But instead of fruits, vegetables, or livestock, this marketplace deals in shares of publicly held companies. Now, why would a company sell its shares? Imagine you're the owner of a company and you want to expand your business. You need capital to do that, right? So, you turn to the stock market. By selling shares of your company, you raise the money needed for that expansion. But who's buying these shares? That's where you and I come in. As potential investors, we buy shares hoping the company does well and our investment grows. The dance between buyers and sellers creates a dynamic environment where the price of stocks fluctuates based on supply and demand. So essentially, the stock market is a marketplace where shares of publicly held companies are bought and sold. Now, how do you get started in the stock market? Well, the first step is research. It's essential to understand the company you're interested in. What does it do? How profitable is it? What are its future plans? Knowledge is power in the stock market. And the more you know about a company, the better equipped you'll be to make informed decisions. Next, you'll need a broker. A broker is an individual or firm that acts as an intermediary between an investor and the stock market. They buy and sell stocks on your behalf, typically for a fee or commission. You can choose from a variety of brokers, ranging from traditional full-service brokers to online discount brokers. Each has its own set of pros and cons, so it's important to do your homework before choosing one. Once you've chosen a broker, you'll need to open a brokerage account. This is similar to a bank account, but instead of holding cash, it holds your investments. Opening an account is usually a straightforward process, involving filling out an application, providing identification, and depositing funds. Now let's talk about stock indices. A stock index is a measurement of a portion of the stock market. It's calculated from the prices of selected stocks and is often used as a benchmark to gauge the market's performance. You've probably heard of the Dow Jones Industrial Average and the S&P 500. These are just two examples of many stock indices around the world. Finally, it's important to understand the difference between investing and trading. Investing involves buying stocks with the intention of holding them for a long period of time, typically years or decades. Trading, on the other hand, involves buying and selling stocks in a short period of time, often within a single day, with the aim of making quick profits. Remember, the stock market isn't a get-rich-quick scheme. It requires patience, research, and understanding, so take your time, learn the ropes, and always make informed decisions. What are the risks and rewards associated with the stock market? Let's delve into this. To start with, the stock market is a bit like a wild beast, unpredictable and sometimes volatile. It's possible to watch your investments dwindle or even vanish due to market fluctuations. This is the inherent risk tied to stock market investing. But don't let that scare you off. The flip side of this coin is the potential for substantial returns. When you invest in a company, you're buying a piece of its future success. If that company does well, your investment could multiply. Now, here's a secret weapon to tame the beast: diversification. Spreading your investments across different sectors and companies can help cushion the blow if one of them takes a hit. It's like not putting all your eggs in one basket. Investing in the stock market can be a roller coaster ride, but with careful planning, the rewards can be significant. So, are you ready to hop on? So what have we learned about the stock market today? We've unraveled the complex puzzle, understanding that the stock market is essentially a marketplace for buying and selling shares of publicly traded companies. It's a place where businesses raise capital and investors potentially make profits. We've also delved into the basics, learning that getting started in the stock market requires careful planning and research. It's about more than picking stocks. It's about understanding the economy, market trends, and company performance. And let's not forget the risks and rewards. Yes, the stock market can be rewarding, but it's not without its risks. It's essential to balance potential gains with potential losses and to diversify your portfolio to mitigate risks. The stock market is a journey, not a destination. It requires continuous learning and patience. So keep researching, keep learning, and remember, every great investor started somewhere. Understanding the stock market is your first step towards successful investing. Keep learning, stay patient, and happy investing. Don't forget to subscribe to our channel for more insightful videos.